Hello traders and welcome to another video review. Today is Wednesday, November 12, 2025. Let's take a look at the Forex economic calendar for today. So overnight data were quite poor. During the Asian session we got only home loans data released from the Australia. Home loans beat the expectations of 2.5% with the actual number of 4.7%. German CPI is in line with the expectations of 0.3%. Eurogroup meeting starts at 11 o'clock, and then we got the Schnabel and the Guindo speeches at 11:45 and 12:40. OPEC monthly report is scheduled for release at 1 o'clock. 5 minutes later, Bank of England MPC member Peel will give a speech. Building permits from Canada are scheduled for release at 2:30. 3:20 there's FOMC member Williams speech, and 4:20 there's Fed Weller speech. EAI short-term energy outlook is scheduled for release at 6 o'clock. 15 minutes later, FOMC member Bostic will give a speech. 10-year note action is scheduled for release at 7 o'clock. At 10:30 we got API weekly crude oil stock, and then data from New Zealand will kick in 11:15. We got electronic card retail sales. So very easy day for the data releases. German CPI data, major event during the London session, already issued. Short-term energy outlook from the US is scheduled for release at 6 o'clock, and those two major releases will shape the today's trading landscape. So without any further ado, let's switch to the charts. We'll start with euro dollar. Euro-dollar 4-hour time frame chart broke above the technical resistance at 1.1592 with the actual level of 1.1606. Nevertheless, it moved back below this this level yet again. So let me just move this local technical resistance 5 pips higher. We are still trading around 100 pips moving average on a 4-hour time frame chart. The market perfectly hits the extremely overbought conditions on a 4-hour time frame chart according to the RSI indicator. We're down towards the level of 60 these days, and the market is waiting for the movement. Now, if we place this price range tool to measure the last correction is 1.6%. And this is the 1.19%, so 1.20, 1.60. So we can still move higher, and this correction will be measured as the part of the downside swing. So still stay on the same page, right? So euro dollar still bearish outlook. British pound, as you can see, has made the 5-wave impulsive movement to the upside. Now the decline has started. We can see ABC to the downside being formed after the 5-wave movement. So the wave A is completed, wave B. Now the place for the wave C needs to be done, and the whole cycle is completed. So the 5-wave to the upside and basically free to the downside as the correction momentum is neutral, perfectly 50 points. So nothing is going on here on the cable chart as the market keeps consolidating around this level and keeps developing the wave C of the potential correction. Please remember, this correction might evolve into more complex and time consuming one. Local technical resistance let me just take a look, 1.3190. Local technical support actually 1.3128. Major level to the upside is still located at the level of 1.3250. So without a breakout above this level, there is nothing like this, and there is no bullish development to the upside possible, right? So let's keep it on the chart. US dollar versus the Japanese yen 4-hour time frame chart is showing us finally a breakout above the 154.51 level. Local high 154.80, so roughly 30 pips away. Momentum is strong, momentum is positive. The market wants to move higher. If we switch to the daily time frame chart, you can see that that's the next target let me just place my line here. The next target after the breakout is 158.89. This is the major technical resistance. On the daily time frame chart, you can see that the market keeps moving higher. Momentum is strong on daily, momentum is positive on daily, so it looks like bulls are in charge of this market, despite the fact that the gap has still not been filled. The outlook remains bullish. US dollar versus Swiss franc keeps moving lower. We got this range basically right now established. The 7,872 is the technical support. The 8,123 pips is the technical resistance, and as you can see, we drop below the level of 8,009 pips, which is the 100 pips moving average. Local low is located roughly around 8,000. There is 7,985 to be specific, and this is the level that is quite important for the bulls, because this is, as you can see, the level of support from the higher time frame, and as you can see here, it has been quite useful in the past. So any breakout below 7,985 is bearish. However, the momentum hits the extremely oversold conditions. Maybe now it's time for a bounce. If there is a time for a bounce, we definitely need to break above 8,031. This is the technical resistance and needs to be violated in order for the market to move higher. So the current situation quite interesting, very nice setup right now. The situation on the US dollar versus the Canadian dollar is looking bearish as well. It looks like the dollar is getting stronger across the board. Potential short-term double top around 1.4139. So there is a technical resistance. We retrace at least 50% of this very nice impulsive swing to the upside. We got this technical support 1.40 round number, and the market doesn't want to go below this level even after hitting the extremely oversold conditions. So right now this is our range, 1.40, 1.4040. So quite interesting situation here. Let me just change the colors to be in line with the other technical analysis examples, and this is what is going on right now on the US dollar versus the Canadian dollar. Traders are selling US dollar, buying the Canadian dollar. So it looks like this kind of a range trading might last for the rest of the week, and on the possibly even for the rest of the month. So we need a very sharp decline towards 1.3887 in order to completely reverse all of the gains from the end of the October, beginning of the November. So in that situation, what the Bitcoin is doing then? Well, the Bitcoin has been rejected from the level of 107,500. We went down towards 102,000, the famous technical support. Nevertheless, you can see here that the volatility is rather low. Basically, we are trading below 100 pips moving average. We are trading ahead of the major technical support. Let me just change this for very there you go, for this kind of a line, and this is not that much important. This is just a regular technical support that it's not being, to be honest, represented, and it's not being respected anymore. So this one here is okay. Now the technical resistance, well, the market is trying to move lower. We already broke below the infamous October 10th low already, right? And now we are still trying. There you go, this is the low, and now we are still trying to move lower than below the 100 periods moving average, below $100,000 as well. So it looks like this corrective cycle to the upside has been completed, and now the market is ready to move lower. If we apply this trend line a little bit longer, there you go. So any breakout below this trend line, this is the internal trend line, any breakout below it is additionally bearish. One more level here before we will finish up our analysis is 98,940, and the breakout is of course bearish. Only a sustained breakout above the supply zone located here, roughly around $118,000 is bullish. Otherwise, the outlook remains bearish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.